Understanding and harnessing the power of compound interest is a key to building substantial wealth over time. Start investing early to leverage the power of compound interest. Compound interest is the magical force that turns small, consistent investments into substantial wealth over the long term. Compound interest is the concept of earning interest not just on your initial investment, but also on the accumulated interest over time. This compounding effect accelerates the growth of your investments, especially over extended periods. Time is a crucial factor in the compound interest equation. Starting to invest early allows your money more time to grow exponentially. Even modest contributions can lead to significant wealth accumulation when given enough time to compound. Regular, consistent contributions to your investment portfolio amplify the impact of compound interest. Set up automatic contributions to take advantage of dollar cost averaging, which reduces the impact of market volatility over time. Understand the rule of 72, a quick formula to estimate how long it takes for an investment to double based on a fixed annual rate of return. By dividing 72 by the annual interest rate, you can get an approximate idea of the number of years it takes for your investment to double. While investing early is crucial, it's equally important to strike a balance between risk and return. Diversify your investment portfolio across different asset classes to manage risk effectively. Consider consulting with a financial advisor to create a well-rounded investment strategy that aligns with your goals and risk tolerance. To fully maximize compound interest, reinvest your investment earnings. This allows you to earn interest not just on your initial investment, but also on the interest you've already earned. Reinvestment accelerates the compounding effect, contributing significantly to the growth of your portfolio. The more frequently interest is compounded, the more your money grows. Understand how often interest compounds in your investment accounts, whether annually, semi-annually, or quarterly, and choose investments that align with your preferred compounding frequency. Investing early and benefiting from compound interest requires a long-term perspective. Stay focused on your financial goals and avoid making impulsive decisions based on short-term market fluctuations. The power of compounding becomes most apparent over extended periods. Starting your investment journey early is like planting a financial seed that grows into a sturdy tree over time. The earlier you start, the more time your money has to work for you, unlocking the full potential of compound interest and setting the stage for long-term financial success. Subscribe for more content.